I wrote the book Naked Forex Full-Time Trader. I'm going to share with you a couple of hacks. Now, the reason why this matters is because it turns out that you can tell where you're at as a trader depending on the way that you approach trading. And this, the reason, before I forget, nakedtradingclass.com. You can go to nakedtradingclass.com and get a free course there waiting for you. You don't have to put in your email or anything. Just watch it, download the cheat sheet and watch it straight away. Nakedtradingclass.com. 3 ways to improve your equity curve quickly. So that's nakedtradingclass.com. Okay, now I ran into this trader, right? And he was at a conference or something. I was actually with my wife. She was doing this conference thing, and he hands me his card. And his card says on there, like whatever his name was, blah, 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 real estate investment or passive income through real estate or something like that. It was something like that. And I looked at him. I'm like, man, this dude looks really familiar. I've seen him somewhere. And I said, man, you look really familiar. I've seen you somewhere. Now, what he didn't know was, and I said, did you go to a trading seminar or something? What he didn't know is I had only been to one trading seminar in my life. Okay. When I first started trading, there were no seminars. Like the seminars were for share traders, stock traders, or futures traders. There's nothing for Forex. There's one book for Forex traders, and I didn't understand it. I was like, why is this guy talking about fundamental analysis? And at the end of the book is all these Gann numbers and everything. Anyway, so I said to the dude, I'm like, man, I'm pretty sure I've seen you at a trading seminar. I mean, having only been to one. And I thought, dude, Limitless says, hey, Walter, thanks for doing these trainings. No problem. I'm glad you're here. I hope it helps. These 3 things I hope really help you sort of focus in on the right things. So I said, man, I've seen you before. I think, do you trade Forex or something? Like, I feel like I've seen you at a trading thing. And he's like, nope, I'm just doing the real estate. I go, okay, interesting. So fast forward the next day, I go home. I was at a hotel, actually. I go to my hotel. I log into my email. I'm like, dude, because I had his card. So I searched his name in my inbox. And sure enough, he was on the list of the traders because they had like a mass group email list thing that went to this event. He was there. I'm like, dude, he did go to that thing. I knew it was him. It was the same guy. I recognized him, but now he was doing real estate. Now, here's why this is interesting. There are basically 2 types of traders. There are traders who like eat, live, and breathe this stuff. Now, trading can still be a means to an end. And the reason why most traders get in trading is because you can use trading to get paid by decisions. Most people get paid by trading time for money. You can make decisions, and those decisions can make or lose you money. So you can make those decisions anywhere in the world. You can make those as many of those decisions as you want. So you could be trading 25, 35 systems, or 2 or 3 or 1. So that's the leverage of trading, obviously, and that's why trading is so attractive to a lot of us. So, and so this guy was just using it as a tool, and I'm guessing probably didn't put in the work. I've spoken to other traders. I know another trader who, he was out in Western Australia, and he emailed me. He's like, man, I'm going to quit working with you, Walter. I'm sorry. Thank you so much for everything you've done. It's really great. But I've got this really good opportunity. And I said to him, and opportunity, the key word, I said to him, I said, hey, man, are you working with so-and-so, this lady that I know of who's doing these like real estate investment things? And I said, just be careful because, markets go up and markets go down. A lot of the real estate people, especially in Australia, if you're not in Australia, you may not know, Australia's had essentially a straight run of a bull market for about 27 years, which is crazy, right? No, sorry, not 20, like 17 years. 17 years, I should say. About 15 to 17 years, depending on how you look at it. So it's been going straight up. So there's like all these courses. You can open the newspaper and you can go and, retire tomorrow by learning how to buy houses with no money down and all this crazy stuff, right? Like all the typical stuff. So I said, be careful, man. I said, good luck. Be careful. Markets also go down. You know when he started doing that? And this was out in Western Australia where the real estate market is down pretty hard, actually. If you look at all of Australia, it's probably was the worst hit because with the mining boom, everyone was buying real estate and you could get, like it was more expensive to get a place like rent an apartment in Perth in Western Australia than it was in Sydney. Like, it was crazy, right? Anyway, so I hope he's okay. I hope everything worked out for him because he got in basically at the turning point. And this is exactly what I want to share with you. Trading, people get into trading because they're opportunity seekers, or they get into trading because they see it as a potential job. Now, here's the difference. I'll give you three ways that you can tell whether or not you're using it as opportunity seeking or as like a job. Remember, before I forget, nakedtradingclass.com to show you 3 ways. One of those ways is probably going to resonate with you. 3 ways to build up an account quickly. nakedtradingclass.com. Okay, it's free. You don't have to put your email in or anything. So now let me show you the 3. Number 1, if trading seems like it's a job to you, that's good. If you have to do, quote, work with your trading, doing your back testing, getting your numbers, working out your risk management, your position sizing rules, all of that fiddly stuff, especially with the numbers and spreadsheets, that's the work of trading, really. That's where you build up your confidence in using like Forex Tester or some sort of simulator. I think there's an one called Trader's Gym that some of my students use. You know, things like that. That's the work of trading. So that's number 1. Trading should be work in a sense that you probably feel like you've got to do something today for your trading. It's not like I'm just going to click a few buttons and, you know, eat Doritos and watch Netflix or something, right? That's not, you can do that, but you have to put the work in first so that you take the right trades, right? And so that you're confident enough to put your feet up and eat Doritos and watch Netflix or whatever you do during the day. Number 2 is, if you feel like you are the casino, if you can be the casino, that's a good thing. The way that you get there is by running your numbers so often that you have a really good sense of what to expect. What to expect in terms. Here's the critical things you want to look at. Average trade. That means all the winners and all the losers divided by the number of trades. So if I add up I do my back test, I have $150,000 worth of losers. I have $290,000 worth of winners. I add all those together, and then I divide by the number of trades. That's your average trade, right? You can do it obviously with your live trades as well. The other thing that you want to look at is your win rate. Is your win rate close to what it was expected to be? So it's probably going to be a little bit lower than your back test, but it should be within a tight range of what you saw. The only exception to that is when you first start trading, it's going to wildly go up and down, and it'll settle in. It should settle in really, really close to where your testing was. So that's number 2. And as a casino, if you are going to be the casino, you need to know a couple of different probabilities. What are the probabilities, not just of a win? That's not going to cut it. What are the probabilities that you will hit your goal? Whatever your goal happens to be, whether it's a dollar amount or a percent return or whatever it is, what are the probabilities that you're going to hit that? Number 1. Number 2, what are the probabilities of having an X% drawdown? 20%, 10%, 15%, 30%, 40% drawdown. What are those probabilities? We talked about in the other videos. Go back and watch those if you haven't. And then finally, if your average trade is off from what you expected, what are the probabilities that you're actually, in the right ballpark, in that restricted range? Because if you're not in that restricted range, something's going wrong. Probably it's on the psychology side. It's probably on execution, but it could be anything really. It could be that you're getting slipped, that you're paying more in swap than you anticipated based on your back tests. Lots of things like that. You could be getting slipped or whatever, but it's usually execution related in most cases. And then finally, the last one is trading boring? It should be. This is something to rejoice. When I tell my students this, I said, is trading boring yet? What I'm trying to do is I'm trying to probe and figure out if their confidence is there. So whether or not trading is boring is kind of like a proxy for confidence. You will have a boatload of confidence in your trading once it becomes boring. Another way of saying that is, once you know that your strategy is going to work or your strategies are going to work, guess what? You don't sweat the small stuff anymore. And it's all small stuff, right? That's all that means. Trading is boring. Executing the trades is boring. I literally go, oh gosh, I got more trades to do. And I plug them in the spreadsheet, run it up, write it in the journal, plug in the orders, all that stuff. It's like work. It literally is like work. It's boring. I don't really care. Like people say, here's a really good test. People say to me sometimes, "Hey Walter, you just had a loss on the pound CAD. How can you just like write that off or whatever? How come you're not talking about that?" You know why I don't talk about that? Because there's nothing I could do about it. There's no reason for me to focus in on and tweak and try and jiggle my system because of what? Bad luck. If I've done everything right with the pound CAD trade and the pound CAD trade is a loser, guess what I chalk that up to? Bad luck. It's not me. I didn't execute wrong. I didn't follow the trading system rules the correct way. I've got a 38% win rate. Chances are most trades are going to be losers, right? So what do I need to like? What is there to go over here? See that mentality, and I'm not faulting. I had the same thing. I did the same thing. I was stuck in the cycle of doom, trying to get higher win rate. I understand it. It's totally normal. I'm just as guilty as anyone. But here's the thing: if I can let go of that mindset and forget about trying to be a winning trader on every trade, and fix my broken system because I had, the last trade in the pound CAD was a loser. If I can let go of that and just answer one question: did I execute the trade as I should have? Did I get in my entry as I should have? Did I get out as I should have? If the answer to that is yes, then the reason that trade lost is bad luck. Nothing I can do about bad luck. Cool, right? Makes sense, right? No big deal. All right. If you want to join us in the free class, it's at I'll put it in the comments here for you guys. It's at nakedtradingclass.com. You can get in there, and one of those 3 methods for building up accounts is probably going to make sense to you. I hope it helps. I wish you happy trading, guys. We'll see you in another video. Take care. Bye.